GM everyone, Stranger Things back again with another video. And so yes, today we'll be talking about the Terra Luna crypto crash, and I'll be doing a TLDR version. So without further ado, let's just jump straight into it. I'll actually be covering what happened with this whole Terra Luna crash, how it happened, what can we learn, and offer some of my take about how to spot future signs of such similar events in the future. And so what happened was that TerraUSD as well as the Luna token, which are both the key components of the Terra ecosystem, both crashed by over 90% in a matter of a few days. So as a result, this flash crash actually caused many people to lose a huge chunk of their savings and scarred many investors from investing in cryptocurrencies. So we're going to be covering exactly how it happened, but before that I think it's important to understand a brief history of the Terra ecosystem. I'm going to keep it really simplified and really short. The whole goal of Terra, right, is to solve the main problem in crypto, which is price volatility. So even though crypto is more than $1 trillion in market cap, right, how many of us really will use crypto in our day-to-day lives except for investment and speculation? And what Terra wants to solve is to create a stable cryptocurrency that allows for the mass adoption of the blockchain. So then you ask, don't we already have all these stable coins out there like USDT, USDC, Binance USD, DAI, and why do we need to create another one? Because all these stable coins that I mentioned, right, are all different types of stable coins. So these are the types of stable coins that we generally know about. The most common type of stable coins are collateralized or backed by fiat currency. So it's the first one that you see here. They are backed at a 1-to-1 ratio, meaning one stable coin is equal to 1 unit of your currency, which is like US dollar or euro or whatsoever. So for each stable coin that apparently exists, right, there should be theoretically one real fiat currency being held in a bank account to back it up. So that is generally how the stable coin works. The main significant difference for commodity backed stable coin is that it's usually exposed to the value of the real world asset, right, such as real estate. And so these assets actually have the potential to appreciate or depreciate in value over time, which can affect the incentives for trading these type of stable coins. So the commodity backed stable coins are sometimes marketed as a way to open up certain asset classes like oil, real estate, and other precious metals. And then the third one we see here are crypto collateralized stablecoins. Because crypto collateralized stablecoins will suffer from more price volatility. So to reduce this risk, typically these stablecoins are often over collateralized so that it can absorb any price fluctuation in the crypto collateral. Let's say for example, I want to get $500 worth of stablecoin and I want to collateralize it using Ether. Then I will actually need to deposit more than $500 worth of Ether to collateralize this $500 worth of stablecoin. Okay, but that is not what we are really here for today. So enough of the grandmother story. What we are here for is the last type of stablecoin, which is the non-collateralized stablecoin. So this means that it's not backed by anything at all, not fiat, not your commodity, not your cryptocurrency. So what is actually helping this stablecoin to maintain its value, right, is purely algorithm to control the stablecoin supply. Example of this will be UST, which is the Terra USD token that we'll be covering a bit more about later. So why will people want a non-collateralized stablecoin? Isn't that like more dangerous because it's not backed by anything? Well, the proponents of non-collateralized stablecoin will actually tell you that using algorithm that is governed by smart contracts is actually better because it is more decentralized. It isn't collateralized to any other asset. In some sense, you can think of it like it won't be intervened by any kind of large institutions or governmental bodies. It is truly a stable coin for the people. So that is the main appeal. And now how does the algorithm actually work, right? So let's say demand for UST increases. This means that it will push up the price of UST above $1. The algorithm will create new UST. So this will bring up the supply to match the increase in demand and match the price back to the normal level of $1. So in theory, the prices of these stablecoins will remain stable because they are driven by market forces. There will be arbitrageurs who will quickly be incentivized to sell or buy UST to make up the difference and peg the UST token back at $1 very quickly. How or where does Luna come in, since so far we've just been talking about the UST token? Because Luna token is the counterpart to this whole UST algorithm. Every time there is excess demand for UST and the algorithm needs to mint new UST to increase the supply to match the increased demand, the algorithm is actually going to burn an equivalent value worth of Luna tokens to swap them to UST. And the same can be said when there is a lack of demand for UST. the supply of UST will actually be burnt, and this is actually done by buying back an equivalent value worth of Luna tokens. Another thing to note here is that every time a transaction is made, there are fees that are paid to the Luna token holders. So this is their incentive to hold Luna. One last thing is also that there's an anchor protocol, which is a savings plan that incentivizes the UST token holders to stake their UST to earn close to 20% annual percentage return on their UST token. Once again, this is just an oversimplified description of the whole Terra ecosystem. And now let's talk about what actually happened leading up to the crash. So because UST is supposed to be a stable coin, right? The 20% APR quickly caused UST to gain a lot of attention and get a lot of mass adoption. And this also leads to more UST that needs to be created. So more Luna has to be burned to mint this new UST to restore the UST pack. And when more Luna is burned, the Luna supply drops. This also causes the Luna price to increase. So you have a situation where more people are trying to get into UST token, and at the same time, holders of Luna are not only getting fees from holding Luna, but also being able to enjoy the price appreciation of the Luna token. So everything was looking very bullish, and people got increasingly invested in the Terra ecosystem. And the anchor protocol yield reserve actually peaked at 78.8 million UST. After which the protocol could no longer sustain the 20% APR, and they actually had to burn through reserves quite unsustainably to maintain this 20% APR that they were promising to the UST stakeholders. This is kind of alluding to what's going to happen next. You can see that the Anchor protocol yield started depleting, and even Do Kwon acknowledged this. And this chart also explains kind of the situation that's happening. If you look at the green and black lines, the green line represents the total deposits and the black line represents the total borrowings. You kind of need the total borrowings to match close to the total deposits so that the bank can survive, because the bank needs to be able to pay out the depositors using the interest that is earned from the borrowers. But I can see here that as of January 2022 onwards, the gap between the borrowing and the depositors started to spiral a bit out of control, all the way leading up to the crash, which happened in May. So how did the crash exactly happen? So both the cryptocurrencies were doing very well, but what actually happened is that one fine day UST plummeted far below its $1 peg. While it wasn't the first time that UST depegged, I think this time round the peg wasn't restored for a very long period of time, and the peg actually fell by quite a lot, even reaching like $0.7 US at one point. But it's speculated that it is likely to be a coordinated attack of high selling pressure by some institutional bodies, which dumped UST on the open market when the UST circulating supply was not too high. So this kind of flash crashed the UST price. And then this caused a whole death spiral to begin. So people start cashing out their UST because they no longer have confidence in UST as a stable coin. So the UST supply will increase. And basically this will kickstart this algorithm which will mint more Luna, right, in order to reduce the supply of UST by burning UST to restore the US $1 peg. But what happens is that when more Luna is minted, the supply of Luna increases, and this causes Luna price to fall. And when people see the Luna price falling, this will cause the whole confidence in the Terra ecosystem to fall further. So you rinse and repeat. Basically, more people cash out on UST, more Luna gets minted, Luna token price crashes further, and eventually UST and Luna both go down the drain. So what can we learn from this whole crash is that no matter what happens in the crypto markets, we have to try our best to remain rational and react calmly. All the viewers of this video will fall into two camps. Either you are a non-victim, which means that you didn't hold much Luna and UST to begin with, you were not very affected by this whole saga, or you are a victim. So I'll first address the non-victim. For the non-victims, right, please try to behave yourself. I know it can be tempting to sometimes tell your Luna crypto bros, like, I told you so, why do you invest so much? It's an obvious Ponzi scheme. But how many of you really can very confidently say without any hint of doubt that prior to this crash, you were absolutely confident that Terra and UST token are going to crash the way it did? For majority of us, we should try to be a bit more humble. And just because the crash didn't affect you doesn't mean that you are necessarily smarter than those Luna holders, right? I mean, personally, I also fall into this non-victim camp, and I take this whole Luna crash as an opportunity to review my own portfolio. Just because it didn't happen this time to me doesn't mean that I'm not at risk. And for the victims, right, I just want to say that tough times don't last forever. Try to keep positive, distract yourself from the cryptocurrencies for a while if you have to. Just remember that at the end of the day, this experience just grows to make you a better investor, right? And so now let's all try to move forward and think about what are the next steps. Is the project truly dead, or can the project make a comeback? So Do Kwon, after keeping quiet on the first few hours of the crash, subsequently came up with this Terra ecosystem revival plan. It's a lot to get through, but I'll probably find some way to link the article in the video description below. Whether this will be successful or not remains to be seen. So even in crisis there is opportunity. Not everything is over. But then again, don't go and do anything crazy or casino-like to try and earn back everything you lost within one go, okay? Please, the last thing you need is another heartache. And another thing I want to talk about is like how you can spot this sign in the future. Just because some of us were not hurt by this crisis, it doesn't mean we are out of the woods. We kind of have to know how to spot this sign in the future. And I think one way is to use Charlie Munger's philosophy of inversion. So inversion just means that you try and problem solve in reverse. As you can see in this quote, Charlie Munger just says, all I want to know is where I'm going to die, so I'll never go there. Instead of thinking about which investment can earn you the best returns, why not think about which investments will cause you to lose your value, and then just don't do that. I know it sounds simple, but I think that this can work out really well if, let's say, you are trying to do any kind of contentious high risk, high return investments. And also I want to share this infographic that was shared by Dr. Wealth, and I think it helps us to understand better exactly why this whole USD depegging happened. So he actually talked about the impossible trinity in economics and how this could actually explain USD's downfall and how we can kind of see it coming. The impossible trinity means that a country can only do 2 out of the 3. So for USA, right, basically they set the interest rate and they also allow free capital flows in and out of the country. As a result, you cannot fix the exchange rate, because if you think about it, you set the interest rate, that means you are trying to control the price of your own currency, but at the same time you want to be able to allow free capital flows. So naturally this will mean that the exchange rate is dictated by the demand and supply for your currency in the open market. The next example we have here is Singapore. So for Singapore, we actually have a fixed exchange rate because we benchmark our Singapore dollar against a basket of currencies and allow free capital flows to dictate how our exchange rate will move, and as a result we cannot set the interest rate. And for the last example, for China, right, they actually set the interest rate and they also fix the exchange rate against a basket of currencies. As a result, China will not be able to allow free capital flow. For UST, it violated the impossible trinity by doing all 3 things. UST set the interest rate through the anchor protocol by promising a 20% APR. At the same time, UST also has free capital flow, right? You can convert UST to any other crypto at any point in time. By right, UST should not be able to control its exchange rate, but UST's intrinsic property of having the algorithm that is pegged via the sister token LUNA is actually trying to kind of control the exchange rate as well. It's not possible to control all 3, so the initial plan was to kind of lower the interest rate to maintain the peg, but I guess it was too slow. So I hope this was a useful sharing for you guys. Last but not least, I want to end off with some quotes, right? So the first quote is that life is not all about money, it's more about relationships. This is more important now than ever. Another thing is that the greatest wealth is health. And last but not least, for those who are not convinced that their happiness lies with health and with relationships, we can also say that being poor is just a choice, especially if you believe that money is the only means to become rich. So that is my concluding thought. I do hope that it kind of helps to educate or inform about better understanding this whole Luna ecosystem situation. I'll be back with more NFT videos after this sharing, but if you do enjoy this style of content, do leave it in the comments below. Like this video if you enjoyed the sharing, and subscribe if you'd like to see more. Thanks for watching, take care, stay safe, and I'll see you in the next video.